This is FOMC news, and I identify that FOMC is very effective in movement, and I was able to capture many pips from this, but I didn't trade. But I came to find that this news, the CPI is not effective. FOMC is very effective, very effective. And if I go to the chart, the same anticipation, I came to realize that it's good to place a range, the short-term range, not the 4-hour or 1-hour chart range, though it may be helpful, but in most cases, especially with this FOMC, it's apparent that the previous range is very effective in determining the market movement, as in this case, the market was coming up, reached the optimal trade entry zone, and it was retesting this region. Looking at the 5-minute chart, you can see how it was behaving, and looking at 1-minute chart, the same thing. So basically, whenever you see the market reaching at this region, looking at the short-term range, it can be a good way to enter. FOMC is very strong, and as you can see, it had went to around 100 pips for AUD USD, and ZD USD. The same thing happened. It went for around 90 pips, so it was going for this optimal trade entry zone. Euro USD had formed initially, but it wasn't clear how it would move. But looking at the buyers from other pairs, the same thing would happen. So it went 130 pips. For GBP USD, the same thing happened. I'm looking at this point, and this point, this range, optimal trade entry, equilibrium, then the market moved downwards. So the same thing happened to USD CAD. This one is very special, because as I was trying to see, the market usually reaches the equilibrium. Whenever it isn't near the optimal trade entry, you look for the down movement to equilibrium, then a jump on the upside. So this is something that I've been building the hypothesis on, and yeah, as you can see here, it was going for the equilibrium before it exploded on the upside. So this is FOMC is something that I'm incorporating in my trading strategy, and I will ignore the CPI. The CPI, these are not good news, and as the core retail says also, they are not very effective. And also another ineffective is this one, and this one, employment change, because it hasn't moved so much in this region. Sorry. So what I'm seeing so very important is FOMC, employment change for Canadian USD, and maybe I can test for interest rate, but for the interest rate, the Canadian doesn't move so much, and I think I'm going to check for those two currently, and maybe I can check next month. What's coming for next month? The next month. So yeah, like this one I actually must trade on this 2nd July. And this one July 7, I shall look out at it. And this one RNZ, on the Canadian interest rate, I don't trust it anymore. The CPI, I don't trust it more. This one I should trust. So on 28th July next month, there's a FOMC statement. I will be waiting for that. So I have this one trade, and which other trade? And two. So I have this one, NZD, and unemployment. So those are the trades I'm looking at, and I will be able to trade on them next month. So let me minimize. Anyway, that's my findings. FOMC is very effective. FOMC, especially FOMC in terms of statement release and economic projections. These are very important indicators.